The market is never wrong. It's you and I who are wrong when we try to tell it what it should do. The tape speaks louder than opinions, louder than hopes, louder than fears. And if you've been trading long enough, you know what I mean. You think you know better. You think your judgment is sharper. You convince yourself that the market owes you a turn in your favor, and then the market humbles you. Haven't you felt that sting yourself? Expert trading doesn't come from being smarter than the market. It comes from being smarter than your own impulses. That's the difference. The fellow who tries to outwit the tape, he always pays in the end. But the man who listens to it, who learns to sit tight when the time is right, and to stand aside when nothing is clear, that man gives himself a fighting chance. Tell me, how often have you lost money not because the market tricked you, but because you refused to follow your own rules? I learned long ago that the market isn't a place for stubborn pride. Pride costs money. Ego is the most expensive thing you can carry onto the exchange floor. The expert trader learns to leave it at the door. He comes in with an open mind and lets the action of the tape guide him. If the line of least resistance is up, you go with it. If it's down, you go with it. And if you can't read it, you stand aside. How many of you have the courage to do nothing when nothing should be done? Most can't. They feel the itch to trade, and that itch is the ruin of more men than bad markets ever were. The professional learns that doing nothing is often the hardest work in this game. But it pays. The amateur wants constant action. He wants to buy here, sell there, always busy, always moving. And what happens? Commissions eat him alive. Slippage takes his edge. The market grinds him down until he's working for everyone but himself. Haven't you noticed that the busiest traders are often the poorest? There's a lesson that separates the expert from the hopeful patients. The big money is not made in the buying or the selling. It's made in the waiting. Any fool can get into the market, and plenty do. But it takes a man of discipline to sit with a winning position long enough to let the trend carry him. How many times have you sold too soon because you were afraid of losing a small profit? And how many times did you watch the stock go on climbing after you got out, leaving the real money on the table? The expert trader never argues with the tape. He may have opinions, but the tape will always settle the argument. A stock doesn't rise because you or I like it. It rises because big demand pushes it up. It falls because big supply pushes it down. That's all there is to it. So why fight? Why insist the market must reward your logic? Tell me what's more profitable, being right in theory or being right in your account. I've watched traders blow up because they believed the market had to obey their reasoning. They read the news, they built an argument, and they bought on hope instead of proof. But the tape doesn't care about your argument. It doesn't care about the news. It cares about the balance of buying and selling. That's all. If you can't read that balance, you're trading blind. Do you see how simple it really is once you strip away the noise? Expert trading is the art of clarity, clarity of mind, clarity of vision. When you look at the tape, you don't bring your baggage with you. You let the market speak. You don't force trades. You don't chase action. You wait for the right moment, the right setup, the right confirmation. And when it comes, you act decisively. Have you ever noticed that the best trades feel almost obvious, so obvious you wonder why everyone else can't see them? That's because you've trained your mind to wait. Waiting clears the fog. Waiting lets the market show its hand. And when the hand is shown, it takes no genius to play it. The genius was in the discipline to wait in the first place. That's where most men fail. They can't wait. They think patience is idleness. But patience is capital. Do you see that? Expert trading isn't about catching every move. It's about catching the important moves. The fat ones. The moves that change your fortune for the year. Those don't come every day. They come once in a while. And if you're too busy chasing pennies, you'll miss the dollars. Would you rather be tired from constant trading or wealthy from patient trading? And here's another thing the expert knows himself. He knows his own weaknesses. He knows his danger points. He knows where his emotions creep in. If you don't know yourself, you'll never last, because the market will find your weakness and press it until you're broken. Do you cut your losses quickly, or do you hold on, hoping the stock will turn around? Do you average down, throwing good money after bad? These are the habits that kill traders. Have you caught yourself doing them? The expert doesn't average down. He doesn't throw money at a losing play to prove he was right. He cuts it. He steps aside. He admits the mistake. And he saves his capital for another opportunity. That's survival. And survival is the first law of trading. Because without capital you don't trade at all. Isn't that the truth? Think of it like this: trading is war. Your capital is your army. Every time you throw soldiers into a hopeless battle, you weaken your position for the next fight. The expert commander doesn't waste his men. He fights only when the odds are with him. He waits for the enemy to show weakness, then strikes with full force. That's how you win campaigns. That's how you win in the market. Do you fight every battle, or do you choose your spots? Now, let's talk about pyramiding. The novice piles into a position all at once. The expert builds it carefully. He adds when the market confirms him, not before. He builds strength as the trend proves itself. That's pyramiding. It's the safest way to ride a big move. You don't risk heavy at the start. You let the market pay you as you prove yourself right. And if you're wrong, your loss is small, easy to bear. Doesn't that make more sense than swinging heavy on the first bet? The expert also knows the danger of overtrading. The market offers temptation at every turn. But every trade carries risk, every trade carries cost. The more you trade without reason, the more you feed the market instead of feeding yourself. Overtrading is the great disease of the hopeful. They can't sit still. They think more trades mean more profit. But in truth, more trades usually mean more losses. How many trades have you made just to be in the game, only to regret them? You see, trading at the expert level is less about action and more about restraint. It's about knowing when not to trade, as much as knowing when to trade. That's what the crowd never understands. They look for excitement, but the professional looks for profit. Excitement is cheap. Profit is dear. Which one are you after? I've said it before, and I'll say it again: the market is a place where the strong take from the weak. Not through cheating, not through trickery, but through discipline. The weak trader gives up his money because he lacks control. He trades on emotion. He wants to be right. He wants to be entertained. He wants to feel clever. The strong trader takes that money because he's learned to do the opposite. He controls himself. He trades less. He waits longer. He risks smaller until the big play is ready. Isn't that fair? One man pays tuition for his mistakes. Another collects because he learned his lessons. The expert has learned to be comfortable with boredom. The waiting, the stillness, the days when nothing lines up that's part of the business. The amateur hates boredom. He wants thrill. And thrill seekers get punished. The market has no mercy for gamblers. Do you treat the market as a casino or as a business? Trading is not about predicting the future. Don't let anyone fool you. It's about reading the present. The tape tells you what is happening now. Not what might happen tomorrow, not what you hope will happen next week. What is happening right this moment? And that's enough. Because if you learn to follow the line of least resistance in the present, the future takes care of itself. Have you ever noticed that the men who try hardest to predict are often the ones who lose the most? The expert doesn't pretend to know. He doesn't pretend to be smarter than the market. He just reads what is. If it's bullish, he's long. If it's bearish, he's short. If it's unclear, he's flat. Simple as that. No need to forecast. No need to argue. No need to prove anything. Just follow the line of least resistance. Can you imagine how much money you'd save if you stopped trying to predict and just followed? Big money is made in the waiting, not the trading. That truth is simple enough to say, but it takes a lifetime to really learn it. Most men who come into the market think the opposite. They believe the way to make money is to trade more often, to be in and out of stocks every day, to keep their money working by keeping themselves busy. But the truth, the cold truth, is that the more you chase action, the less you give yourself a chance to sit in the kind of position that changes your life. Haven't you ever wondered why the crowd always seems busy but never seems rich? The waiting is where the real profit lies. It isn't glamorous, and it doesn't make for a good story to tell your friends, but it is the only way I ever saw a fortune built in the market. Think about it. You can buy a stock today and sell it tomorrow for a point or two, and maybe you feel clever for making quick money. But where is the real reward? Where is the move that takes you from small profits to big success? It's in holding a stock when it runs from 30 to 60, or from 60 to 120. It's in letting the trend pay you, not trying to scalp pennies off the tape. And to do that, you must wait. Do you have the strength to wait, or do you grab at crumbs while the feast is still in the oven? Every trader thinks he can outsmart the market with quick action, but the market isn't a place where cleverness pays. It's a place where discipline pays. When you jump in and out all the time, you're cutting off your own profits before they can grow. You're trading like a farmer who digs up his seeds every morning to see if they've sprouted yet. If you don't give them time, you never get the harvest. Haven't you done the same with your trades sold too soon, only to watch them double after you got out? It takes nerve to sit still. It takes courage not to do something, not to fiddle, not to cut your winners short because you're scared of losing a little paper profit. Most men can't do it. They want action. They want to ring the cash register, but the expert trader knows that ringing it too often means it never fills up. The register fills when you let your winners run. And that means you sit tight, no matter how itchy your fingers get. Can you stand to watch a stock wiggle and jiggle without letting go of it too soon? I learned it the hard way. Early in my career, I made small wins and big losses. I'd sell the moment I had a profit because I was afraid of seeing it vanish. But then I'd hold on to my losers, waiting for them to turn, waiting for the tape to forgive my mistake. That's backward. That's how most traders lose. The right way is to cut the loser quick and let the winner grow. And the letting grow, that's where the waiting comes in. It's the sitting, the holding, the doing nothing while the tape works in your favor. How many times have you reversed that rule and paid the price? The crowd thinks waiting is wasted time. They think if they're not trading, they're missing out, but waiting isn't wasted, it's investing in patience. It's giving your trade room to breathe. You don't get rich by trading more, you get rich by trading better. A handful of big moves a year can make more money than 100 small ones, yet who has the patience to wait for those big moves? Do you? The tape will always tempt you to act. Prices will shake, news will fly, rumors will buzz. Every tick seems like a reason to jump, but the expert ignores the noise. He sees the larger picture. He knows that the small fluctuations are just ripples, not the tide, and the tide is what makes the money. You don't set sail to chase ripples, you wait for the tide and let it carry you. Do you chase the ripples or do you ride the tide? I remember watching stocks move in long waves. The amateurs would buy in late, sell out early, or trade in and out so many times they ended up with nothing but commission slips. Meanwhile, the man who bought right and sat still made a fortune. It looked easy from the outside, but it wasn't easy at all. It took more strength to sit than to trade. Most people don't realize that. They think action means strength, but in this game, patience is strength. Haven't you noticed how much harder it is to do nothing than to do something? The market is a great teacher of patience if you let it be. Every time you cut a winner short, you teach yourself the wrong lesson. Every time you wait and let the trend reward you, you prove the truth of this principle. The waiting is what builds confidence, because you see with your own eyes how much money comes from sitting. And once you've felt that, once you've watched a stock run far in your favor because you refuse to sell too soon, you'll never forget it. Have you ever had that one trade that finally taught you to sit tight? Of course, waiting doesn't mean stubbornly holding everything. It doesn't mean ignoring your stops or your rules. It means once you are right, once the market proves you're right, you don't second guess yourself. You don't snatch at profits like a nervous thief. You sit like an owner, letting the market hand you its reward. That is the waiting I speak of. That is where the big money lies. The trick isn't getting into the right trade. The trick is staying there long enough to collect. Isn't that where most traders fail? The tape doesn't pay men who are impatient. It punishes them. Impatience is the tax that amateurs pay. They sell too soon, they buy too soon, they move too soon. And every time they do, they give their money to the trader who has learned to wait. The market is a machine for transferring wealth from the impatient to the patient. That's as close to a law as you'll find on Wall Street. Do you want to be the one paying that tax, or the one collecting it? It's easy to talk about waiting, but it's not easy to practice. Your mind fights you. Your fear fights you. Your greed fights you. You want to lock in a gain before it slips away, or you want to grab more too soon. But the expert learns to silence those voices. He knows the real work is not in finding trades, but in holding them. The real battle is not against the market, but against his own impulses. Have you ever noticed that your worst enemy in the market is usually yourself? Big moves are rare. They don't come every day, every week, or sometimes even every month. But when they come, they pay for all the waiting, all the boredom, all the discipline. And if you miss them, if you cut them short, you'll always wonder why your trading never seems to add up to much. The answer is simple: you didn't wait long enough. You didn't give the trend time to reward you. You wanted quick results, and quick results are small results. Is that what you're after, small results? The greatest traders I ever knew weren't the ones who traded most often. They were the ones who could sit still. They weren't rushing in and out. They weren't showing off their clever trades. They were quietly holding, quietly waiting, quietly letting their money grow while the crowd exhausted itself. They understood the power of time. They understood that waiting is not weakness but strength. Can you see now why the big money is always in the waiting? Overtrading is the surest path to ruin. Nothing empties an account faster than the constant need to be in the market, buying and selling with no real plan, no clear signal, no patience to wait for the right spot. Overtrading is like a disease, and the worst part is most traders don't even know they have it until the damage is done. They feel the itch to act, and they scratch it by jumping into trades that have no business being made. Haven't you felt that pull before? That restless urge to click the button just because you couldn't stand sitting on your hands? The market tempts you with endless opportunities. Every tick, every movement, every rumor feels like a chance to make money. But not every movement is worth your money. Most of them aren't. The expert trader knows this. He understands that the tape is a constant flow of noise, and inside that noise are only a few true signals worth trading. The amateur, on the other hand, thinks every tick is an invitation. He confuses activity with opportunity, and he pays for that mistake. How many times have you looked back at your trades and asked yourself why you even made half of them? Overtrading doesn't just drain your account through bad decisions. It drains it through cost. Every time you trade, you pay commissions, spreads, slippage. Those small costs pile up like termites eating at the beams of your house. Slowly but surely, they hollow out your foundation until the whole thing collapses. The man who trades 20 times a day needs to make a fortune just to cover his costs, while the man who waits and trades sparingly can let his profit stay in his pocket. Do you see how the busy trader works for everyone but himself? The biggest problem with overtrading is psychological. The trader feels the need for excitement. He thinks he has to earn his living by being constantly active. He gets bored when he's not in a position. He feels like he's wasting time if he's not pressing buttons. But the market doesn't reward activity. It rewards accuracy. And the more you chase action, the more likely you are to miss accuracy. Haven't you noticed how the busiest traders always seem the most tired and the most frustrated? The expert looks at trading as a business. A business has overhead, it has risk, it has inventory. If you keep buying and selling inventory without discipline, you bankrupt the business. The professional treats every trade like a serious investment of his capital. He doesn't throw it around like pocket change. Overtrading, in that sense, is like gambling at every table in the casino. You can't win them all. The odds will grind you down until nothing is left. Do you gamble at every table, Or do you wait for the one where the odds tilt your way? When you overtrade, you also cloud your judgment. You stop seeing the market clearly. Every new trade becomes a blur, a reaction to the last loss or the last win. You're no longer trading with a plan, you're trading with emotion. That's the fastest way to spiral downward. A string of quick losses makes you desperate, and desperation leads to bigger mistakes. Before you know it, you've doubled your position, averaged down, ignored your stops, and you're staring at a hole you can't climb out of. Haven't you ever chased your way into a disaster after one bad trade? The cure to overtrading is discipline and patience. But patience feels like pain to most men. They think waiting is weakness. They think if they're not active, they're missing out. But the truth is, you miss out far more by forcing trades than by sitting tight. The market doesn't punish you for waiting. It punishes you for being careless. Every unnecessary trade is like handing your wallet to the house and asking them to take a little more. Why would you do that to yourself? Overtrading also blinds you to the real opportunities. When you're constantly in motion, constantly chasing the next tick, you can't see the big move when it comes. You're too tied up, too worn out, too committed to small plays. The expert knows that you have to stay light, stay patient, and keep your powder dry for the right moment. You can't catch the big waves if you're splashing in every ripple. Have you missed the fat move because you were too busy chasing the thin ones? There's also the toll it takes on your emotions. Overtrading leaves you drained. Every entry, every exit, every decision burns energy. And when you burn yourself out on small trades, you don't have the strength left to manage the big ones. Trading is not only about money, it's about mental capital, and mental capital wasted on overtrading is as costly as dollars thrown away. Have you noticed how exhaustion makes you careless? The market doesn't care how often you trade. It cares how right you are when you do. The expert measures success not by the number of trades he makes, but by the quality of the positions he holds. He knows that one or two strong trades, managed with patience, can pay for an entire year. The overtrader never gives himself the chance, because he's too busy bleeding his account dry on the small stuff. Which one do you think survives longer, the man who trades constantly, or the man who trades wisely? Another danger in overtrading is that it builds false confidence. A few small wins in a row can trick you into believing you've mastered the market. You start trading more often, pressing harder, stretching further, and then the market reminds you that small wins don't make you safe. In fact, they make you vulnerable, because they encourage you to overreach. And when the hammer falls, all those small gains disappear in a single stroke. Have you ever given back a week of work in one afternoon? Overtrading keeps you from being selective. The expert knows he has to be choosy. He doesn't have to swing at every pitch. He waits for the fat one. But the overtrader swings at everything, and the strikeouts add up. Discipline means passing on trades that don't meet your standard. Overtrading means lowering your standard until anything will do. And when anything will do, you'll end up with nothing. Isn't it harder to say no to a trade than it is to jump in? The funny thing is, most traders overtrade not because of opportunity, but because of boredom. They can't stand to watch the market without being part of it. They don't want to feel left out. They see others making moves, and they think they have to be involved. But trading isn't about keeping up with others. It's about protecting your own stake and waiting for your own pitch. The expert doesn't mind being bored. He'd rather be bored with his money safe than entertained with his money gone. Can you honestly say you'd choose the same? When you look at the records of great traders, you'll notice something: they didn't trade every day. They didn't trade every week. Sometimes they sat for months, waiting for the right setup. And when it came, they struck hard. They struck big, and they made their year in one move. That's the way it works at the highest level. The rest of the time, they did nothing. Overtrading would have ruined them, just as it ruins countless traders every day. Do you think you're stronger than the law of averages? Overtrading is a slow bleed. It doesn't always feel like disaster at first. It feels like work. It feels like effort. You're busy, you're active, you're alive in the market. But day by day the losses pile up, the costs eat away, the fatigue sets in, and suddenly you realize you've been running in circles. That's when most men give up, blaming the market, when the truth is they defeated themselves by trading too much. Haven't you seen it happen to others, maybe even to yourself? Cut losses quickly, never average down. That is one of the oldest truths in trading, and yet it is the one most men ignore. They ignore it not because they don't know it, but because they don't have the discipline to follow it. Human nature wants to believe that a bad trade will turn around if given enough time. Human nature hates admitting it was wrong, and so the losing position is held, defended, justified, and even added to. But the market has no mercy for human nature. The market only respects discipline. Have you ever found yourself holding on to a loser just because you couldn't bear to admit the mistake? The first loss is the best loss. That is something I had to learn the hard way. A small loss is like a scratch, it stings, but it heals quickly. A large loss is like an open wound, it weakens you, drains you, and can put you out of the game entirely. Every big loss I ever saw started as a small one that someone refused to cut. That is how fortunes are destroyed. Do you see how easy it is to stop the damage at the start, and how impossible it becomes once you let it grow? The temptation to average down is the deadliest trap of all. A stock goes against you, and instead of cutting it, you convince yourself to buy more. You think you're lowering your cost. You think you're being clever. But what you're really doing is throwing good money after bad. You're deepening your exposure to a trade that already proved you wrong. That is not courage, it is stubbornness. And stubbornness in this game is punished without mercy. Haven't you watched traders average down until their account was wiped clean? Averaging down is the hope trade. It's the belief that the market must eventually come back to your price. But the market doesn't owe you a return. Stocks can go much further than you think, and they often do. What looks cheap can get cheaper. What looks oversold can be sold even more. And while you wait for your miracle, your capital is tied up in a bad position that eats at your confidence and robs you of the chance to take better trades. Isn't it true that the money stuck in a loser is money you can't use on a winner? The expert trader never argues with the tape. If the tape says he is wrong, he accepts it. He takes his medicine quickly and moves on. He knows that survival is everything. Capital is his army, and he doesn't waste soldiers in hopeless battles. But the amateur treats the market like a debate. He insists on proving his point. He doubles down when the tape says he's wrong, until the tape breaks him. Which kind of trader are you, the one who fights, or the one who survives? Cutting losses quickly doesn't mean you lack conviction. It means you respect the market more than your own ego. It means you understand that being wrong is part of the business. No trader wins all the time. The expert expects losses. He plans for them. He makes them small, so the winners can take care of the rest. But the trader who refuses to cut a loss turns a business expense into a catastrophe. Have you ever thought about how much easier trading would be if you treated losses as part of the cost of doing business? The beauty of cutting losses quickly is that it gives you freedom. Freedom to trade another day. Freedom to take the next opportunity without being chained to the last mistake. A trader who carries big losses loses flexibility. He is trapped, waiting and hoping, watching his equity drain away while the market moves on without him. A trader who cuts losses quickly is light, nimble, ready. He can strike again when the real chance appears. Do you want to be chained to yesterday's mistake, or ready for tomorrow's opportunity? I've seen more men ruined by refusing to take a small loss than by any other single mistake. They don't just lose money, they lose time, they lose nerve, they lose faith in themselves. A bad trade that lingers becomes poison in the mind. It makes you second-guess every decision. It fills you with regret. And that poison spreads until you can't trade with clarity anymore. That is the hidden cost of not cutting a loss. It doesn't just damage your account, it damages your confidence. Have you ever noticed how one stubborn trade can ruin your whole rhythm? Averaging down appeals to pride. Pride whispers, I can't be wrong. The market must come back. Pride whispers, I'll prove them all wrong by holding on. but pride has no place in the market. The tape doesn't care about your pride. The market doesn't bend to your will. The expert knows this, so he checks his pride at the door. The amateur carries it like a badge, and it drags him into ruin. Which voice do you listen to, the voice of pride or the voice of discipline? The quick loss is your insurance. It's the small price you pay to protect yourself from disaster. Think of it as a toll you pay to stay on the road. Every time you cut a loss quickly, you buy yourself another day in the market, another chance to catch the big move. Every time you refuse, you gamble your entire stake on the hope that you're right and the market is wrong. That's a dangerous gamble, and it's one you don't have to take. Haven't you noticed that traders who survive longest are the ones who are quickest to admit mistakes? The hardest part about cutting losses quickly is emotional. It feels like failure. It feels like giving up. But it's not failure, it's strategy. It's business. It's the cost of staying alive. Once you train yourself to see it that way, you stop fearing the loss. You see it as a tool, not a punishment. You see it as part of the process. And once that shift happens, you'll never again let a small loss grow into a large one.